All right, today we're tackling a giant. We're talking about Berkshire Hathaway, one of the most famous companies on the planet. And we're going to break down the two powerful and totally opposite arguments for its future, the bull case versus the bear case.
And really, the whole debate hinges on this one massive event. The Oracle of Omaha himself, Warren Buffett, is stepping down at the end of 2025. This puts his legendary creation at a massive crossroads. So the real question is, right, is this masterpiece built to last forever, or could it actually start to crumble without its architect?
So that's what we're here to do. We're going to give you the core arguments from both sides of the aisle, the super optimistic bulls and, of course, the skeptical bears. The idea is that by the end of this, you'll have everything you need to make up your own mind about where Berkshire is headed.
Okay, let's kick things off with the bull case. The argument here is pretty simple. Berkshire Hathaway is way more than just one person. It's a financial fortress, built piece by piece over decades to do one thing: thrive for generations.
And to get why the bulls are so confident, you've got to start with the track record. I mean, look at these numbers. Since 1965, Berkshire has cranked out almost 20% compound annual growth. The S&P 500, just about 10%. So Berkshire has basically doubled the market's return for over half a century. That isn't just good performance. That's total dominance, and it's the bedrock of the entire bull argument.
And then there's this number, $344 billion. That's the mountain of cash and short-term investments Berkshire is sitting on as of mid-2025. Now, you got to understand, this isn't just a rainy day fund. It's a war chest. It gives them incredible stability and the firepower to make huge moves when everyone else is running for cover. So, the bulls will tell you this whole fortress is built on four key pillars. First, you've got insane diversification. We're talking over 60 different businesses, from GEICO Insurance to the BNSF Railroad. If one area is weak, others are strong. Second, that fortress balance sheet. Their debt is incredibly low, just 16.7% debt to capital. Third is this famous culture moat. It's a hands-off approach that lets great managers do their thing. And finally, you have Greg Abel, the successor, who's not some new guy. He's been inside the system for years.
And this right here is maybe the most important piece for the bulls. Buffett himself has said this. He's not just handing over the keys. He's on record saying his successor is just as good as he is at the most critical job there is, deciding where to invest all that money. For the bulls, what more do you need? That's the ultimate seal of approval.
But of course, that's only one side of the coin. Now we have to flip it over and look at the bear case. This is the argument that, for all of Berkshire's strengths, it's facing some huge risks, and that its best days might actually be in the past.
And you know what? The bear case starts with the exact same point, succession, but they see it completely differently. Look, Greg Abel is a phenomenal operator. He built Berkshire's energy business into an absolute beast, but his entire background is in running businesses, not picking stocks and buying companies. The bears ask a simple question. Can a great operator, even a brilliant one, really replace a once-in-a-generation investor?
Now this number, $660 billion, is the core of the next bear argument. That's Berkshire's market cap. And it brings up something called the law of large numbers. Think about it. When you're this massive, it's incredibly hard to find an investment that's big enough to actually make a difference to your bottom line. It's like trying to turn an aircraft carrier. You just can't make sharp, fast moves anymore. And here's another risk that bears love to point out. Yeah, Berkshire owns a ton of stocks, but its portfolio is actually super concentrated. Apple alone makes up more than a fifth of the whole thing. That's a massive bet on a single company. If anything ever goes wrong with Apple, it's going to hurt Berkshire a lot. And finally, the bears see a storm brewing on the horizon. You've got regulators who might want to break up huge companies like Berkshire. You've got huge potential liabilities from wildfires for their energy business. Then there's the post-Buffett discount, the very real risk that the stock price just drops because the legend is gone. And let's be honest, Berkshire is conservative. It could easily get left in the dust during the next big tech boom.
Okay, so we've heard two really compelling but totally different stories. Let's try to boil this all down. What are the three key things you absolutely need to watch that will probably decide Berkshire's future?
Number one, and this is the big one. How does Greg Abel actually use that $344 billion? Does he go for huge stock buybacks? Does he hunt for another elephant-sized acquisition? Or does he do something totally different, maybe pivot into tech? Second, can they even find a place to put all that cash? If it just keeps piling up, it actually hurts their returns. It becomes a drag. And third, how does the new team handle all these new threats, especially the regulators and those big operational risks in the energy division?
So, we've laid out the evidence for both sides. We've looked at the good, the bad, and the uncertain. Now, it's your turn to be the judge.
When you strip it all away, it really comes down to this. Are you in the bull camp, seeing a self-sustaining fortress built to last on a foundation of culture, cash, and diversity? Or are you in the bear camp, seeing a massive empire that's facing two almost impossible challenges, replacing a legend and just being too big to grow?
So what's it gonna be? After hearing all this, where do you land? Are you a bull on Berkshire's future? Or are you a bear who thinks the golden age is over?
We genuinely want to know what you think, so jump down into the comments and tell us, bull or bear? And please, don't just leave a one-word answer. Tell us why you think that. That's where the best conversations happen.
And hey, if you like this breakdown, make sure you hit that subscribe button to join us here at The Bull vs. the Bear. We do deep dives just like this all the time. Thanks for watching.